Hi, Warriors. Alexander, Jamie, welcome back. Bran, AJ, how are you? Hello, Sinatra. Kman, words of wisdom yesterday.
Hi, Dale. Hello, everybody.
I wouldn't give up on the dollar.
Mm-hmm.
Kman. That's before
Yeah.
it made that big turn yesterday. Nice call. So a little bit of follow through to dollar strength. And it's interesting how Aussie, look at that, went right to the 50-day before it got rejected.
Mm-hmm. Yeah.
So, so how much is left?
In the dollar,
Yeah, new highs here. Think we
I'll
should
let
get
you
new.
know tomorrow after the GDP.
Okay, all right.
That's the one I'm waiting for now, really. It's been quite noticeable that the comeback has been pretty thorough. Aussie failed up there after the inflation. Well, they were higher than expected, stickier than expected, but lower than last month. And
Yeah,
also, as I've noted already a couple of times, it doesn't look like in FX currencies, at least, that inflation trades are long lasting right now. So the FX market seems to look through them, and we've seen the same thing happening in sterling and in euro earlier. So it's a bit like I said. Like I think we are trading different animals right now, or different data really, more than inflation. It's not gone, but of course not. But they are less long-lasting moves than for other data.
okay,
So that
about
I think
100
is
low.
the takeaway from the night. And
Yeah,
then yeah, I mean the dollar tree got shaken on Monday by the bond herd, and then it came back with a vengeance, right? We're back to levels
yeah,
even lower than where we were in sterling, for instance, on when it all started on Monday. There were some
and,
decent bits in the cable.
and
First,
that's with yields really mostly lower
yeah,
while
yeah,
that
yeah,
was happening.
yeah,
You know,
yeah.
I do remember talking to a Fed guy, and he said when rates drop, it doesn't mean automatically that the dollar's going to sell off because rates in Europe might drop faster.
Exactly. And that's
Huh?
why on Flow Show, every time I start to look at charts, I start with the differentials.
Okay. All
And
right.
uh,
And
and
is that what happened in the last week that
uh,
Bunds
if you look
yields fell faster?
well, the euro and US differentials are not that moving that much, and then that's where I guess we saw the euro crosses as well, going up a little bit, which have cooled down now, but still pretty high versus some. But it's especially over the past 24 hours is the UK and US differences have widened in favor of the US in quite a bit, actually.
Oh,
And
okay.
that is really weighing on the cable since yesterday.
Right. The gold and the silver are definitely, trading differently still, uh, expressed by the gold silver ratio, of course. Looks like
Yeah.
it wants to go to new highs.
Mhm.
This is also, kind of correlates with a strong dollar. So we'll see. I mean, the gold hasn't given up anything.
No, and it held really the first retracement level around 1954. It tagged it and just held there rock solid in gold. That's not giving up well for 1 years, but then especially geopolitical risk, right?
Yeah. Um, Platinum, I have, I've had a long-term target of about 800 in platinum. I'll be interested to see where the metals are when that happens. It's still another 83, but platinum could move, big overnight. But platinum looks lousy still. Took out support, bear flag. Silver looks not as bad as platinum. So, that old expression that the white stuff would lead, that's definitely not the case. There's more
Mm,
fear of a monetary problem than just an inflation problem, or this wouldn't be happening
yeah.
on the gold silver ratio. Yen, same type of comatose. Um,
You want to trade
can you
it?
make a comment on the Japanese coma?
Well, yeah, I mean, it's still a battle between some fear of interventions. And Bank of Japan coming up next week, where they may tweak the YCC again. That's a possibility. And then on the other side, the government, which keeps spending. And it's should be pretty clear right now that there's a lot optionality going on around 150, which is keeping a lid on it right now. When it's going to pop, I don't know. Perhaps tomorrow on the US GDP, if it confirms the higher expectations, or next week Bank of Japan, if that still doesn't do the trick. I don't know.
Yeah,
Um, it's a bit useless to have a dollar yen position right now because I mean, if they won't intervene because it's a standstill, the MOF will
yeah.
not intervene. But
If we went
option
to
markets can.
51, if we went to 51 or 52, do you think they'd come in?
Um, it all depends what the dollar does and at what speed we go up there. If
Yeah,
you break 150 and you trade 152 the next morning, then there's a high chance that they come in some shape or form. But it all depends on the speed. And if the rest of the dollars is bid, what are they going to stop? That's always my question.
yeah. Well, they say never sell a sleeping market, right? Yeah, but
Yeah,
this is definitely a sleeping market
yeah,
for
very
now.
much a
Have
sleep.
volumes dried up too?
I
Volume?
have not got a clue, but I can imagine that they do in such a case. The funny thing, and I'm always keeping an eye on options, is that we still have quite a bit of volatility in the dollar yen options, but that's likely because of the next week Bank of Japan and then the US GDP in the middle. But
Okay.
yeah, the vols have not really tanked yet.
Yeah, and the won still holding its 50-day
Yeah,
up a little better than the yen.
yeah,
Still think we're going to make a run towards these highs, buddy?
but keep yeah, I think so because they are in again planning to inject what is it, 137 billion dollars in the market in China, right? It starts to look like very much like the yen right now. I
Yeah,
mean, the investors don't have faith in the currency, but then the central bank, well, it's a different thing in China because the central bank has the power to intervene, where in Japan it's the MOF. But the rest, the picture looks relatively the same if you look at if you overlay them. China is a little bit more volatile, but
yeah,
the picture looks exactly the same. And what's happening is about the same too. You in Japan you have the MOF trying to prevent the yen from weakening too much. In China you have PBOC stubbornly fixing high the Chinese yuan, and but both governments are spending a ton of cash, and that is keeping the investors away from really buying the currency.
Looney looks like, well, we've retested this high or got close to it. The speed line comes in around, I don't know, 38, 35 or so.
Yeah,
Um,
I think it's a decent target if Bank of Canada changes, if McLem changes his tone a little bit after last week's CPI. Those mid 138s is looking like a decent enough target for any moves right now.
okay, so that would still be around this high.
Yeah,
All
that
right.
one and the one prior to that is just a tad higher.
Yeah.
Is that? Oh, is that
Yeah.
140?
Well, 139,
Oh, I thought
77.
that was well below one, well, around 139. Anyway,
Yes,
I mean,
77, close to a big round number,
okay.
140. Yeah.
I'm not sure that Bank of Canada will have the power to make it move that much today, and I wouldn't expect so.
Okay.
Well, because the risk, and good morning, Kman, the
Hey.
risk is that the Bank of Canada could actually raise rates. I mean, that's like the kind of outside risk.
Yeah,
I think it's a little risk, but it is an outside risk today, right?
absolutely.
So if they do, the one thing, Dale, if you're looking at a weekly chart on the dollar CAD, we are at channel resistance. I mean, this has been a big level of resistance that's held the dollar Canadian, that's capped us really over the last couple of weeks. So we've been knocking our head up against there, and I don't think that they're going to raise rates. And if they don't, I mean, you just said it, K-Man, but maybe Macklem does change his tune enough to where it allows for the dollar Canadian to finally break free of this tight range,
Oh, yeah. I mean, my base case is that if we get some sort of surprise, I'll say it's either the 25 BPs hike, or them keeping a hawkish tone. That there will be enough people sitting around the 137 and below to come in and try to catch a knife there. That's sort of my case for today. But if they surprise on the other side, don't hike, and McLem says, "Yeah, I think we're there," then this thing is going to explode, right?
Yeah, right. Yeah, it could be. Dale, you want me to show you that channel I'm seeing?
Yeah, because I can't find it. It
Oh,
must be way back left.
No. It's right here. This is it's something we've been showing. This is the weekly chart, right? So
okay.
yeah, you can see it's just really been capping us. Here's the daily chart just to give you a better view. And
right,
we're breaking out of triangle today. This is a risk of a double top here, and as K-Man and I were just discussing, if they don't raise rates, if they don't raise rates, is that enough to stop the dollar Canadian from breaking out here above 138? I mean, I think the risk reward at this point is, it is obviously at this very second, you short the dollar CAD, put your stops above 138 and call it a day and just hope this big channel holds. But here's the other risk. Obviously crude oil is a big risk when you're dealing with the Canadian, and so is risk aversion. If there's one currency pair that looks a lot like the VIX over time, you could actually go to the dollar Canadian and just put in a weekly here. We can do this. I'll put it on a chart that I don't normally use. We can do this, and let me delete any drawings that we have here. We don't have any drawings. And let's zoom this out and do something like that. And then let's just put up the VIX on top of it. When you see spikes in price in VIX, the dollar Canadian is like one of the very first to respond. So if you see a move higher in volatility, that is going to be, in my opinion, the catalyst that drives us above 140. It's not going to be the Bank of Canada doing, no one's going to give a crap. It's going to be volatility is increasing and people are worried and people start buying dollars. That's what it always boils down to when you're dealing with the dollar CAD. And and you can see it really, you start narrowing down what VIX is doing and what the CAD's doing. It's very similar. So really strong correlation there. So like I said, I don't necessarily think that the dollar Canadian can't break above 140. I think it's going to be more of a catalyst of what happens in Israel. Yeah, and Hamas and if things accelerate, then it's going to be seen here, in my opinion.
It is quite responsive to what happens in oil as well, right?
Yeah, exactly. And so that's the other tricky one, right? Because you're like, well, let's say we have volatility, ripping, above 25 but crude oil is ripping too, because the Middle East, tensions have got, let's say the Strait of, what's the Strait of, what's it called?
Hormuz.
Hormuz, thank you. It's like we have issues there, and then next thing you know, crude oil is back above 100. I mean, does that stop the dollar Canadian from going higher because it's pulled in two different directions? That's a big question mark for the dollar CAD, and I think that's been one of the big issues with
What's
the
your
dollar CAD.
look on WTI, Blake? It doesn't look that good. Looks like we had a failing rally.
It doesn't actually. I as I said yesterday in our ForexAnalytix community, as we were dropping, Mark, MRBH in our chat room, as Kman knows, he's like, wow, this, crude oil is really coming unglued. And I'm like, there should be buyers stepping in between 83 and 82. And the reason why is it's a 38% retracement. It's big support zone. And I was making the case yesterday, and that's why I just removed what was there. You can see it right here. I was in our daily roundup, which is exclusive to our community. I was like, hey, if I'm not going to trade the dollar CAD or crude oil, because if I bought crude, I would automatically lose money, because that's how well I trade crude. I'm like probably self-proclaimed probably one of the worst crude oil traders, but I can call it. I just, for some reason, every time I try to trade it, I get upside down on it anyway.
Yeah.
So it was dropping here, and I'm like, if you're gonna buy crude oil and you think that things are gonna get worse in the Middle East, why not pick it up here at the $83 level and put your stops below 81.50? That's, to me, that seems like the risk reward. But Dale, you're right, it doesn't look good.
Yeah, I mean, on the flow show, I said if you look at the reactions that we had on events, it should stabilize here in at least 81.5, 83.5 zone.
Yeah, I mean, it's a 83.17. That's the 38% retracement. Yeah. You can see it's finding buyers, but I agree, Kman. But I mean, maybe
can't deny the double top at 90 and the inability to keep rallies.
Yeah,
and that brings you back to the actual supply and demand balance. I mean, if things all of a sudden get worse in the Middle East, if it spreads, then this thing is probably going to rip and really rip very, very, very fast. But if you get like a long spun out conflict, like we had, like kind of Ukraine kind of thing, but it's never going to be the same, of course, because there's different actors and the I mean, okay, they're different. Let's keep to that. Then you may have like the same effect. You're going to go do another leg higher, and then all of a sudden, and I call it collective Alzheimer of the markets, and you all of a sudden get too used and blasé about those moves and things, and then money creeps where air can't go, and we're probably going to stabilize again.
It becomes more of like a recession trade, right? I mean, recession or non-recession, I guess. So it's a tricky one here, but I think the risk reward is buying crude at current levels, and trying to, like, if you were to trade it on the long side here, just where we're currently at, and you said, okay, well, my stops are going to be at 81, but I'm targeting back at 90, and you're long here. I mean, that's a good risk reward. I mean, so I mean, you're long at,
like the guys, the traders that put on long oil positions on the outbreak, on the incursion by Hamas, the massacre, they're gone now because of the recent action. So that was almost 3 weeks ago. So with crude dropping $10 afterwards, they're not long anymore.
So what do you think here, Dale? What would you do?
So I think it's a good shot. I mean, I'm bearish, but if there is going to be, Israel's not going to just sit on the sidelines forever, negotiating this. If you think that there's going to be it turn into something regional, it's a good shot. I'm kind of like you with the WTI. I mainly watch it, and if I trade it from the short side because of recession or just my nature. and I'm afraid to
That's
short it.
because you're an inner bear. This is how you display your inner bear, Dale.
Yeah, my inner teddy bear.
Your inner teddy bear. Hey, let's talk a little bit about the dollar, because Kman, we discussed this yesterday. It's hard to be short the dollar, right? And the dollar bounced right back up. Now we are at resistance. So I would say this is long-term flag pattern resistance. If you guys are, dollar bulls, that's what it looks like.
What would it measure, Blake? Well over 109, wouldn't it? What would it measure?
We're going
New
to
highs?
113. No,
Wow.
match highs somewhere around. Just maybe stop shy of new highs, so this way, you can get that longer term dollar rolling over. But let's not put the cart before the horse right now. We have a breakout to do. And K-Man, what I wanted to say is I don't see anything that's going to create a breakout in the dollar today. I mean, if you look around at the data, I mean, we got housing data coming in today. Everyone expects crap, and it's not like we're going to get something blowout. We got some new home sales today. We have the Bank of Canada that can't move the dollar. I mean, it can move the dollar CAD. It's not going to be a dollar moving move, and unless we see Israel really advance into Gaza and escalate this thing, which could happen, I guess. I can't see the dollar really taking off here.
I mean, not
ahead of tomorrow, right?
Not going to continue to bang on about Middle East all the time, but it seems that the foreign governments are really trying to stall things a little bit. But the actors on the ground itself, who are directly implicated, they are not giving up yet. So something can happen any hour, but I don't think really today, right? So we are clearly waiting for tomorrow, I guess, on that GDP. We have been talking about that. That's going to be the mover of the week. I mean, if it's not month end, of course, but that's going to me to be the mover of the week, really.
And I guess we should probably remind people, because a lot of everybody will say that this is my argument to you, K-Man, but GDP is so backward looking. But this isn't the final GDP number, right? This is the preliminary advanced or preliminary numbers. I forget what it is.
It's the advanced number, right? It's not.
Yes, the advanced number, and we get durable goods, and we'll have some GDP price index numbers in there. So it should. I agree with you. I think it's going to be a number that we have to watch tomorrow for sure. And with that being said, we also have the ECB, right?
Yeah.
And I guess we could talk a little bit about the ECB since why not? Do you think they're going to make any tweaks on the PEP program? Like to try to shrink its balance sheet a little bit?
That's the kicker for tomorrow. I mean, the rest should be a bit of a non-event, but that's the kicker for tomorrow, if they would do, because Lagarde has been gradually moving back from a very hawkish stance, now saying and acknowledging about the issues and things like that. Still, of course, keeping the inflation talk alive, but she is much less hawkish than she was a month ago or 2 months ago, let's say. So tomorrow, really, to me, is going to be talk about QT. If they advance the talks, that may be a bit of a hawkish thing. And then really 15 minutes later, we have the before the conference begins, we have the US GDP. So tomorrow, euro dollar should really be on the move. But for ECB as such, I think if it's really a non-event, if they don't say anything at all, I think it's going to be weaker for the euro. Really,
yeah.
I think then for the euro to be supported, and we have seen again the reaction, despite US yields not doing a fresh high. We've seen the reaction after Monday. We are back to levels where we were before. Yeah, we are not breaking lower, but because there's not too much of a reason either. But we are back. We are not staying high in euro dollar, just like we are not staying high in cable and Aussie and whatever. So if they don't do anything at all, I think it's going to be perceived as a bit weak for euro. And then, of course, we have the dollar side of things 15 minutes later.
Yeah, it's sandwiched right in between the ECB presser and the ECB statement.
Yeah.
And you make a great point. If they don't mention PEP, that means they're not messing with their balance sheet, and that's not a bullish thing. That's a bearish thing.
Okay, the original expectations were that they are going to talk about it firmly in December to put it in place in 2024. That's the base case. But there has been talks and the hawks at the ECB saying that, like, oh, we shouldn't be waiting to talk about it. So that's where the uncertainty lies for tomorrow, I think.
Yeah. Okay. Great heads up. Hey, so we got the dollars right up against resistance as we head into North American trade here. We got the sterling that is right at support. I mean, how disappointed are sterling bulls right now? I mean, if you're a bull and you were buying it yesterday right into this descending trend line and thinking, oh man, here we go. I mean, this thing can't get out of its own way. I mean, these PMI data, the PMI, I didn't think the PMIs were that bad yesterday.
No, but still sub 50, and there's something else going on there in sterling again. I think, okay, the market is probably looking back at those weak retail sales that we had last week and everything. Then you had this dollar shakeout, let's call it that, on Monday into Tuesday, and then and then it's coming back with a vengeance. And as I said at the top of the show, and I look at that in every flow show, on every flow show, is that if you look at the differentials, they are surprisingly widening quite a bit again, and we are very close to the widest that we have seen earlier this month, and the widest that we have seen in favor of the dollar for quite a while. Can you do me a favor and type?
Yeah. Do you want me to put it in?
Yeah, or do you want me to show it quickly?
GB10.
No. You do GB05Y minus US05Y, because that's what the market is really watching the most. 05Y minus US05Y.
US 05Y. Okay, so
yeah, and you put it on like the 1 hour or so, or the 4 hour.
Yeah, here's a
Look at that.
4 hour. Let's yeah.
So here's the zoom out just a little bit. We were trading well above, like going into September, right? We were trading above parity, let's put it that way, and now we are trading quite low, right? We're trading in favor of the dollar, because the negative is where the dollar yields are above the sterling yields.
Right. So until you see this turn, it's going to be hard to see the sterling rally, I guess.
Exactly, but that's, I think, why we're finding those offers in sterling every time sterling rallies a little bit. Now, it's not your only thing to watch, and I continue to repeat that, but it is something that I'm watching very closely every day.
But you have to, right, Kman? I mean, when you're in a situation where every central bank is they've got monetary policy basically at at their terminal rate, roughly, give or take, you got to start watching the differentials, because this is what's going to be moving the FX market, right? Yeah, I mean, so I think it's wise that you do it every day on the flow show, because when these shift, it's gonna tell you what's happening below the surface for those of you that trade currencies. So yeah.
And this thing, the day that something turns in the US, for instance, and you see this thing starting to get back higher, you just don't want to be short cable anymore.
Right.
It's one of my guides every day that I'm watching anyway.
There you go. Mine is watching the F.A.C.E show every day with Dale. That's what yours should be.
That's the second one.
Hey, real quick, just so everybody knows, we had Microsoft earnings yesterday. Microsoft is trading higher. So that was a nice beat.
It's up like $14.
Yeah. I mean, pre-market, we're up $14, almost 4.5%. We also had Google Now Google's down, or at least it was yesterday.
Did
Oh
we
yeah, we're
have
down.
Amazon? Because Amazon's down too.
No, Amazon's not. I don't think Amazon's this week. Amazon might be next
Oh,
week. I have to double check
okay.
that. But yeah, you have Google that's kind of fighting the tape here. It's down quite a bit. You can see pre-market, we're down about 6%. I think Visa's
that's a
earnings
big
or
miss.
yesterday.
Yeah.
As well. Visa was, well, I guess it was up yesterday post-market. Now it's down a little bit. Remember, MasterCard also is this week. I think MasterCard's tomorrow, but also today we have Facebook and IBM aftermarket close. So just keep in mind that Meta's a mover. I mean, this is one that could really, break out or forge out a double top. So just keep your eye on Meta as we go into today. And I also have to say, equity markets, they've bounced off of 4,200, but I'm not convinced. I mean, we're capped at the 200 DMA right now on the S&P. We can't really get above it, and that's scary. If you're long equities, that's scary. You start looking around at the dollar, you start thinking about what's happening in the Middle East. You look at the price action in the S&P. We have a couple of bad earnings over the next, or misses over the course of the next couple of days, especially in IBM, Meta. Tomorrow we have I guess Amazon is tomorrow, Dale. So we got Amazon tomorrow, MasterCard tomorrow, Intel's tomorrow. You start seeing some bad earnings, and this 4,200 level might give way. So just be careful here. I want to thank everybody for being with Dale, Kman, and myself today. One of my favorite people that you interview is Adam, and hopefully he's here. Is he here?
He is here.
All right. Well, love to hear Adam's insights, especially about China. Kman, thanks for your views today. I know you're holding down the fort on the Flow Show. So if you want Kman all day, every day this week, jump over on the Flow Show, which is how many hours ago was that, K?
Pop 2.5, 3.
2.5 hours ago. Yeah. I'm sleeping, Dale's sleeping, but hey, if you're up during European hours and you're around, make sure you're listening to Kman. Ryan is out and about. I guess you guys went and had dinner last night. So
yeah, but it was an early one.
Oh, cool. Well, that's always nice when you guys get to meet up. And I know Ryan's off with his family for the next couple of days. So you guys, thanks for joining in. Adam, welcome to the show. Dale, thank you so much for guiding us every day here on the F.A.C.E show.
Thank you, Blake. Thank you, Kman. You're getting a great review for someone who just showed up to the Flow Show today. Jamie said it was great. And, I've never seen one, but how couldn't it be? Because I get to hear you and Ryan a lot. So I think it's a real service to have those 4 eyeballs telling you what's going on every morning. So thank you, guys.
Cheers, Dale. Have a good interview.
All right. And Adem, welcome back. How are you, my trading warrior brother?
Hey, gentlemen. How you doing?
How do you know I'm a gentleman?
Well, I could just imagine you guys as. So he's
you think
Blake
I
keeps
open
good
doors?
company.
Think I open doors and do that kind of thing for women? Yeah, I do. Okay,
yeah,
so
hey, wait, real quick. Good morning, Adam. How are you?
Doing good, Blake. How have you been?
Good. Hey, so this is a big discussion, a big talking point right now. Do we call you Adam or Adam?
Adam.
I know.
Adam.
I'm
Is
lazy.
Adam?
I'm gonna lazy
Okay.
American.
Yeah,
I'm just gonna say Adam.
Yeah, no, it's actually Adem, but
Adem. Okay.
Yeah, but that's just with Turkish accent. Otherwise, just Adam's fine.
Okay.
There we go. All right. So I'm gonna try to be proper next time.
Call you anything, but just call you.
Just call me, maybe. Right. All right. I'll let you guys be. Thanks for being here, Adam.
All right, buddy.
It's always a pleasure, guys.
Last time we talked, you were thinking about taking a flyer on the short side of semiconductors. NVIDIA would have worked pretty good.
Yeah, I did the SMH.
Okay.
The,
And it's working.
Yeah, it's working. It could be better. I still think semiconductors are going to face some trouble.
Okay, so I think you've been on Trader Summit for an interview, and you're moving your focus to China. Before we get into it, give us the why. You think as China goes, so goes the rest of the world?
It's it's not so much what that it brings down the rest of the world. The big issue that I think is with China is that now that it's become clear, and I know you and I have talked about this and for like over a year ago, is that China's economy was always very imbalanced. They have an extremely low share of consumption to GDP. It's not even in the top like 18 countries, and it's the second largest economy. I think it's like 54% of their economy is consumption. And the rest of it is investment and
Yeah.
net exports. And the issue with it is that you cannot escape the laws of diminishing returns. And they ran into this problem essentially after 2008, where everything was slowing and the Beijing wanted to hit these lofty growth targets. The thing is, if your real economy can't justify that growth, you need to pump credit and infrastructure spending into the system. And it's the same thing with the US. Like we depend heavily on consumer debt and consumption, but at least wages in the US rise relatively higher than most places in the world in real terms. In China, they're very anemic, so they don't have that spending power.
Okay. They say that I don't know, working population in the 20s, if the numbers were correct, half of them are unemployed.
Oh yeah, the youth unemployment numbers in China, they stopped posting it like a month or two ago, but yeah, there was a university that said if they did the exact same metric that how the US labels unemployment, uh, it would be like 45%.
Wow.
Which is worse than like the pig nations.
Yeah. Okay. So that gives you plenty of recruits for the army to go and, stand guard in Taiwan.
I'd be curious because of China's one child policy, a lot of the children there grew up very spoiled. Okay. So I would be very interested if they actually had to, have a humbling effect of joining the military.
Yeah, and well, they can't find wives. One, they would abort the female. So a lot of these guys probably pretty frustrated.
Yeah, and like wedding dowries to get a wife are like bankrupting some families in the rural areas.
Well, they're the opposite of the U.S. The bankrupting comes after the marriage here.
I know, right? Yeah, the U.S. does whatever it can to
you go bankrupt right into it.
Yeah.
Okay. Anyway, so what else are you thinking about in China and its effect? Is it possible, Adem, and I've thought about this, that with Xi, his number one priority is national security over the economy, and that everyone wants them to break out their bazookas again, and they're doing little tweaks here and there, that their population could handle a poor economy better than the West, and they know that if they're not pumping things up like they did in 08, 09 and pulled the world out of that recession, they'd be willing to take a hit to drive Western economies down.
I think it's possible, but I think they would have to do some serious reforms in China, like allow the household share of GDP to start increasing, put some social safety nets, run bigger deficits to try to get their growth going, to subsidize it, which is kind of what we've seen yesterday or last night when they announced that they're going to raise their mid-year budget by 0.8%. And just for the record, they've only ever adjusted it higher I think the 1990s Asian contagion crisis,
Oh
the
yeah, currency.
Sichuan,
Yeah.
yeah, the Sichuan disaster. I think it was an earthquake, and 2008. Those are the only three times that they've ever mid-year come out and said like we're going to raise our deficit uh, spending, and I think it's interesting they're doing it now, but when you look into the details of what they're doing it on, it's just more infrastructure. They're like going to go rebuild like water, like dams and water conservation and disaster hit cities. So it's just more, so they don't want to deal with the painful reforms that they have to do because to rebalance their economy, you would essentially means that their investment share of GDP would have to decline and then the consumption share would go up. And it sounds easier said than done because in the short term, then local governments are screwed. Infrastructure spending, exports would be screwed. You'd have to have the yuan rise, appreciate significantly because a stronger yuan means more imports, which is enriching the middle class, but obviously then it's going to affect their exports. And I don't see China wanting to go that route, or clearly they haven't. Japan didn't either. Uh, Brazil in the 70s, 80s didn't do it either. And I think it's very politically difficult for them to try to manufacture that. So if this was like 10 years ago, post '08, I could see China being in a much better position. But now, like since 2008, Chinese household debt to GDP has risen. It's over 60%. It's gone up from, it was like high teens in 2008, 9. Now it's 64%. I mean, to put that in context, it took the US about 50 years to get to from post World War II of like 15% to around 60, 65%. It peaked in '08 at like 110, 120, but still, it still took like 50 years. China like crammed the household mainly with speculative housing debt in put them under a huge amount of leverage. Now they're having their property prices fall, and it's just burying them in debt. And then you have like Country Garden and Evergrande. It's Evergrande. I call it Levergrande though. They have 500 billion in combined liabilities. Just those two companies, and they're both out of cash basically. And that's more than like Turkey's entire public debt. That's more than like Austria's public debt. That's more than like most emerging markets' debts total. And it's just crazy. That's two private companies in China.
Okay, so what's actionable about having these insights?
So as a contrarian, I could see it being like interesting looking at China now. I mean, it looks like Beijing is getting serious to step up the floor. And even though they're choosing stimulus over reform, that's still could give some confidence to the equities or so forth. I'm not there. Like, I don't like China's economy. I just don't think they have any real potential growth going forward as is. But that doesn't mean like equities can't rally. So I would be looking at maybe just as a contrarian, maybe long China positions is something to like keep an eye on.
Like
I mean,
FXI, just a general one,
yeah,
FXI.
there's FXI, there's the MSCI one. I forget the name. It
Yeah.
starts with
How
it
about the
starts with an A.
currency itself? It's on not that far away from making new
Yeah,
lows against the dollar. Could
yeah.
there be, if the dollar is peaking in general with one more leg, maybe 109, could being long the yuan be a kind of a contrarian trade now? Do you
It,
think it could pay off?
I mean, it could. Definitely the rate spreads are hurting China, but
Yeah,
I think the big issue, what's really hurting China, the yuan right now, which is their central bank is easing essentially. They're trying to ease because they're in a slower patch. And by them easing, obviously it's widening the spread because they're cutting interest rates while the US has been rising interest rates. They're like one of the only countries that are really cutting or had really cut. And it just
right.
battered the yuan. I mean, I think they saw like biggest outflows of investors, like money and banks that were transferred out from the onshore to the offshore market. It was the highest it's been since China's shock devaluation in 2015, late 2015. And I think China, they're going to keep feeling pressure on the yuan, all else equal. But I think what's really worrying is because I've seen some analysts, they're like, oh, China needs to repeg to like 8.25 to promote exports. Yeah, and I just and like I get
I
why
know
they would
that's a
say
big
that.
worry for some people is that they just let it go.
Oh yeah, I
And
mean, so that's what China, yeah,
that would
that's what
be
they
letting
don't
it
want.
go over
That would be
age.
letting it go. And I agree. And that's why they're spending so much time. Because, I mean, as you know, you're a currency trader. Like, there's those psychological, like, anchoring biases. Like, if you know what I mean, like, you get used to the band, or like you go, oh, you know, it won't go below this, or it could go below this, or they'll step in. Because once a currency starts dropping, that's, you know, that can become a really bad amplifying feedback loop. And
Yeah.
China, same with Japan and the yen, they kind of put like 150 as that like anchoring effect, like letting
Right.
people know, like, hey, we won't let it like run, apparently, or we'll do what we can to protect it at these prices. Because if they do let it run, then you have, you know, massive capital outflows that could completely screw with, you know, their banking, financial plumbing, forex market, FDI, foreign direct investment, and but but the thing is with China, they if they want to slowly creep it weaker, like steadily, so instead of it just going right to 825,
Yeah.
they've talked about that, but I think China's aware of it. They're like, or they must know behind closed doors that the weaker their yuan gets, the more expensive imports will become. So it'll help their exports, but their imports will get worse, and that's China's problem. They already have weak consumption. It's not really the exports that are the issue. I mean that's also declining, but imports are declining faster, and that's what China's kind of worried about. They're like, well, we can't let the yuan go too low or crash too much because then that'll really curb domestic demand.
Okay. So the elephant in the room is what's happened in the Middle East over the last 3 weeks. And I know you're a voracious student of financial history and history. And do you have any ideas about, what the end game could be for markets, parallels to the past of um, how, if not to position yourself, how not to get run over by a geopolitical event? You have any thoughts on this recent new uh, turmoil that we have in the world?
Yeah, I mean, things are getting really I mean, that whole area has always been a powder keg. I thought these kind of, unfortunately, I mean, it was inevitable. The resentment, years of generational hatred, government biases, etc. I mean, it's just all fed on itself for so long that
How about
it
thousands
was,
of years? The
yeah, thousands of,
Philistines. The
yeah, right,
Philistines, that's where the word Palestinian comes from, Philistine.
right. Yeah, you have multiple groups. I mean, then you have religion involved, you know, then you have
Yeah.
nationalistic. I mean, the whole thing was just a powder keg, and it was a big black swan lurking around the corner. We didn't know when it would happen, but you know, now it's happening. And I think, yeah, I mean, there could be a lot of turmoil. The shekel, the Israeli shekel, has been battered over the last year. Even before the invasion, it's been. I mean, obviously, every currency to the dollar was getting battered, but the the main thing with Israel and that I think it depends if the war. So we know that the US has been buying Israeli bonds. Like a lot of wealth managers in the US are like, oh, we think Israel's long-term prospects and growth are attractive. They run a current account surplus, blah blah blah. We're buying their bonds. Now, maybe they're just buying it, you know, like the US was
For a
selling
trade.
Liberty bonds. Yeah, yeah, to trade and also to finance
Oh, I
them and
see.
keep their interest rates low because after the war was announced, the shekel like plunged.
How
And
much?
I'm not sure how much,
Like
but it had
10%, 5%?
It must have been over 5. It must have been over 5 within that
Okay.
after October 10th, 11th. And then
Okay.
when I was looking at it last, and then, but yeah, it's been on a slow decline for the last year, but that was like a very noticeable drop. And I think it just depends if they can do this fast. I think people are I mean, they always end up underestimating how long these things take, right? Like Iraq War, Afghanistan,
Yeah.
like something that was easy lasted almost 2 decades, or yeah, 2 decades. Ukraine, Russia, same thing. Everyone thought it would be over fast. Now it's just a war of attrition. And on the economic side, I mean, yeah, this is I'm not for it, but wartime spending kicks in and that fuels demand somewhere, right? Like it takes a lot of money to run military. You're paying out families, you're buying equipment, you're doing government contracts. So I think there are some benefits, but I think the US is, I mean, the US GDP is almost like doubled from that. I'm sorry, deficit at this point is already almost doubled from last year. It's what, almost near 2 trillion at this point. It's like 1.7-ish. And I think, we have an election year in the US, which probably the government's gonna run bigger deficits. And I think that's where we're seeing a lot of the hotter growth come in from over the last quarter, is just the US deficit. Because when the US spends, or when your government spends, it's creating a net private asset. They're spending, they're putting that money that they just create or essentially borrow from the banks or investors, and then they're just putting that money where they want it. So instead of being parked in savings and someone's not spending it, they're like, hey, I want yield, I'm going to buy a bond. I wasn't doing anything with this money. Now the government gets it, and then they could go, hey, here's your social security. Hey, here's your government subsidy. Hey, here's your whatever government project. Then they pay their employees, right? They just add that money into their bank account. And then that individual goes home and he's like, cool, I'm going to go buy a TV or etc. So it becomes a net private sector asset. The problem is if you create too much, and that's like the predominant theory of how the governments run big deficits, it's because if you're creating more essentially buying power by putting more money in the economy and the good amount, like supply is fixed, or let's just say that it's not as elastic, it's not as elastic, or it's inelastic, then you have prices start rising because you're having more of these financial assets, dollars, competing for the same goods. So I think a lot of the growth we've seen isn't from the private economy in the US. I think it's just because the US government's running, or I should rather say, it's no surprise that the US GDP has been heating up. At the same time, US deficits have also heated up.
Did you think that the bond market has received enough bad press and horror stories and sovereign debt crisis to be a contrarian trade, TLT-ish?
Oh yeah. Yeah, I mean I've gotten my face ripped off on long bonds this year, but I just think that I'd rather hold it, collect the yield. Granted, it's like 1.5 ish plus 2 percentage points below money market. But the thing that the bonds give you is because once the money market rate, I mean, yes, the rate's higher, but once inevitably the Fed starts cutting, it may not be tomorrow, it may not be next year, but eventually they're going to do it. And I think when you have the bonds, you can also get that capital appreciation from it. So
Yeah.
not only are you locking in that yield for the duration, but then also when they cut rates, you will make a profit. Whereas with a money market fund, like you're getting that high yield, but once they cut, you know what I
There's no
mean? The next
capital
day it's
gain.
gonna drop. Exactly, it's
Yeah.
gone. Like, and then you have to sit there and figure out like, oh shit, like, or I'm sorry, excuse my language, but they're like, oh, I got to figure out what to do now. And then, then they have money will
Yeah.
probably chase into bonds trying to lock in that yield. So
Yeah.
the US yield curves had a huge bear steepener recently, and I
Yeah.
think that's I mean, historically that's the
Call
worry,
signal.
because now, yeah, that's the bear signal in my opinion, because it's bull signal for
Bear for
bonds, but
equities,
yeah,
bullish
bear
for
for equities,
bonds.
and yeah,
Okay.
historically, yeah, because now that tightening is, because when the Fed started hiking and they inverted the yield curve, and the curve is still inverted, but
Yes. Yeah.
when
Not as much.
they essentially inverted the yield curve, it didn't really tighten financial conditions because the long end of the curve stayed low, and long end is what the banks control and what they
Right.
lend at.
Right.
So now that you're seeing I think a bear steepener, to the best of my knowledge, if I remember right, it's when you have the long end rise over 50 basis points within like a month, like a very sudden sharp move up. And I think the 2 and 10 has steepened in the last 30 days around 60 plus
So
points.
qualifies.
Yeah, so it qualifies as a bear steepener, and I think that so finally the Fed is getting that tightening. And I think historically when people say, "Oh, the yield curve is inverted," it comes with a lag, and I think this is because of that lag. Because when the yield curve inverts, you have to start slowing borrowing, and then the long end starts rising, whether from investors just shedding bonds, generally, which is what's happening. U.S. supply of bonds is increasing because of their bigger deficits, fiscal outlooks, whatever the issue is.
Yeah, it sounds
And
like
then,
every reason not to buy a bond.
yeah, it does. Yeah, that's usually how it is, right? They get to the
Right.
extremes. And then, but I think the US's bond bear market is the worst one currently in the last 200 years that
Yeah.
they've even like compiled the data. And I think as a contrarian, yeah, that makes it attractive.
Okay, because I could just well, you're up there. So wrap it with me. Any new positions that you're putting on? Would you try the TLT again down here? Would you do anything with the yuan or the dollar or gold? Are you impressed with this gold move? You think this is the beginning of a huge bull market, a huge wave in gold, or is it another head fake?
Yeah, I've liked gold for a while actually,
Okay.
since
All right.
since I started really doing like investing in 2014. It
Okay.
got battered back then, but as a contrarian, I was like, the supply fundamentals of it, everything looked, intriguing. Same with palladium and platinum back then.
Yeah.
So now I think gold, it, the thing is, gold has held up very well in a
Yeah.
rising rate environment. And
Yeah.
to me, it creates more asymmetry because if it was able to keep itself sustained while rates were rising, I'm
With the headwind.
assuming,
Yeah.
yeah, I'm assuming it'll have a huge tailwind once rates come down eventually. And also, you have rampant central bank demand for gold. I mean,
Yeah.
the US. I mean, they're especially China, like they're running a huge current account surplus. They may be trying to run a fiscal deficit right now, but that's different than their trade surplus, their current account surplus, and they're diversifying those dollars. I mean, their dollar is rising fast too, but they're also allocating some of that to gold. And I think we're seeing countries do that, trying to just park some of these reserves somewhere. And not only that, but there's been major gold consolidation in post 2018 when like the big gold companies after the
Oh
bear
yeah.
market and gold,
They bought them up. The little
yeah,
companies.
so you're creating like oligopolies in gold mining, which can essentially control more of the supply. We've seen gold production drop the last 3 years post COVID, or it peaked in 2019, and then the supply, net output from the data we can see has been declining. So that's usually a good sign because the supply is going. I mean, we saw it in uranium, and I mean that was
Yeah.
one of
Well, the
my
hell of
favorite
the
things.
uranium. That was really a dynamic move. I think if the market washes out, you should be buying the breaks in uranium. Don't you think?
Oh yeah, yeah. I mean, well, I've been like a long-term investor in uranium because of, but I agree, like for short term, like, yeah, that would be the way to do it just because, even after, like, to put it in context, after Fukushima happened, the disaster, the tsunami,
Right.
so the demand for uranium plunged, but at the same
Right.
exact time, uranium production rose year over year at around like 10-15% all the way up until 2017. Like it literally kept rising. So they were overproducing into a glut while demand was weak until finally, because it just shows how difficult it is. I mean, these companies can't just turn off supply. You spend, right? You're like spending billions to build a new property. You're trying to wait out your competitors at this point until finally the marginal player. And we kind of saw it with oil recently, but Saudi Arabia doing cuts. We saw Kazakhstan, which controls all like essentially 50% of the world's uranium output in 2017-18. They were like, you know what, we're slashing output. So it's like you had the big boys throw in the sign, throw in the towel, and then we saw uranium bottom. Then we saw it start rallying because the supply side started contracting rapidly as demand picked up. And I think, we saw it in oil recently too. Usually, I don't focus on demand numbers because they're too low. I mean, one, it's really difficult to forecast demand, and two, supply I think matters more because if you take away the supply, like in oil, they start cutting supply, boom, oil price rips. After it comes with a lag. Obviously, there's time lags,
Right.
but I think
Right.
gold. So to the original point, yes, gold had a good run. Now there's diminishing gold deposits even being discovered anymore. So I do think gold supply side alone makes it attractive.
Okay. Two questions to wrap it with. Will the Diamondbacks win the World Series? And will ASU win at least one more game this year? Will they win a game
No,
this year?
I don't know. I don't watch college football.
Okay.
But that is my state's football
All right.
team, premier
And how
football
about
teams.
the Diamondbacks?
Yeah, I mean, they won it when I was in fourth grade or something. Yeah,
Oh,
fourth grade.
yeah.
back
All
in
right.
yeah, back in '01, I believe, and against uh the Yankees. So
Oh,
yeah,
all right.
I could see them. I could see them doing it again.
All right. Well, call your bookie. And thanks for dropping in. Thanks for being part of the team.
Yeah,
And
I appreciate you guys having me on.
yeah, so Dem, good hunting on whatever you do, contrarian. Best trade between now and say the end of the year.
Ooh, I don't know. I
That's too short term for you, isn't it?
yeah, I don't. Yeah, sorry guys, I don't have
Okay.
anything for you.
All right. Okay. Well, thanks for filling us in on what you thought of China and what you're thinking about the war and everything. So appreciate your time, buddy. Thank you. And you could follow
Yeah, I appreciate
Adem
you
at
too, sir.
follow Adem at Radical Adem on Twitter at Radical Adem, and there's a lot of interesting posts he puts up. So uh, follow the thinker, Adem the thinker, and that's going to be a
Oh,
wrap for
flatter
us
me.
today. What, buddy?
I said you flatter me.
All right, well, put on your thinking cap like Tom Terrific, and if you don't know who he was, Google it and you'll laugh. Tom Terrific.
I'm
And
terrific. I'll
that's
check it out.
all right. You could join the team in 13 minutes on the morning edge. Good luck the rest of the day, everyone. And don't just count your pips, count your blessings. See you tomorrow. Adios. Thanks again, Adem.